And Kenya's debt service to revenue ratio was around 60% as of December 2023. Kenya is drowning in debt, and interest payment now couple more than half of the government revenue. What if we could turn our minerals and oil resources into lasting wealth instead of quick cash? And that is precisely what the government is planning with this new sovereign wealth fund. So in this video, we're going to break down whether it's a game changer or just another promise. And for the formation of a fund in Kenya, there are three components that you need to understand. And that is the reason behind it, the policy framework, and also the governance of this fund. So we're going to start with the reason behind the formation of this sovereign wealth fund and also the infrastructure fund. So those are the two funds that the government announced as an alternative to debt borrowing when it comes to development of our country. So we're going to see the reason behind the formation of these two funds. And one is because of the debt burden that we have in Kenya. And as you can see from these statistics, as of the end of June 2023, Kenya's public debt to GDP ratio was about 70.08%. And for the fiscal year 2023-2024, Kenya's total debt service as a share of ordinary revenue rose to 68.3%, up from 58.8% in the previous year. And Kenya's debt service to revenue ratio was around 60% as of December 2023. And interest payment alone represent about 29.3% of total revenue in 2024. You can see it's more than a quarter of our revenue in 2024. And during an 8-month period to February of a given year, Kenya paid out about 84.4% of its tax revenue just to service debt. So you can see that we only remain with less than 20% for development. And from this statistic, we can see that the reason behind the formation of these two funds is because the government is looking for alternative way to finance its development projects rather than depending on borrowings and debt, because it's really costing us a lot when it comes to refinancing this debt. And with such a large portion of government revenue going to debt repayment, there is less left for services like health, education, and infrastructure. The high debt service costs constrain fiscal space and limits Kenya's ability to invest in growth-oriented programs. Basically, from these statistics, you can see that the main agenda behind the formation of this fund is to come up with an alternative way of financing our development projects rather than depending on borrowing. And our second important component about the formation of this fund is the policy pivot. Kenya's government announced the establishment of two funds, that is the Sovereign Wealth Fund and Infrastructure Fund, aimed at reducing reliance on new borrowing and utilizing state assets. The plan includes monetizing public assets, starting with a share sale in the Kenya Pipeline Company to seed the fund. And the reason why the formation of this fund is relevant is because it signals a change in financing strategy. Instead of simply borrowing more to pay for infrastructure and development, Kenya is trying to use already existing assets and future resource flow to build sustainable funding. So Kenya is now moving from debt finance growth to asset finance growth. And this also ties into the mineral and oil resource angle by channeling resource revenue into the fund rather than to support deficit in the budget. And the government hopes to create more enduring value by doing that. So instead of utilizing the revenue from resources to support budget deficit, they are channeling it towards the fund that will help in development of our country. And let's now go into the most important aspect for a successful fund, and that is governance and trust. The success of such fund, that is sovereign wealth and infrastructure, hinges heavily on transparency, good institutional framework, and accountability. So for this fund to succeed and to stop us from going back to borrowing, then we need to have good governance. So the fund is only as good as how it is managed. High public debt and asset monetization need strong governance to avoid resource misallocation, corruption, and political interference. Even if Kenya has the right idea, the execution will matter more, because we really suffer a lot because of corruption. Even with the debt crisis, it's because of corruption. Most of the money that the government borrow end up being misused, and that's why we find ourselves in a debt crisis. So for the government to achieve a lot from this fund, then management is one of the most important aspects. And let's now go into understanding what sovereign wealth fund is and how it will help Kenyans. And then thereafter, we're going to see what infrastructure fund is all about and how it will help Kenyans. So sovereign wealth fund is a government managed fund that will take in proceeds from things like privatization of state assets, dividend from state-owned enterprise, royalties from minerals and oil, and also budget surpluses. It will include sub-funds such as stabilization fund to cushion against economic shock, an infrastructure and development fund, a future generation fund to save for the long term. So this is how the sovereign wealth fund will help Kenya. One, it will help in stabilization and shock resilience. When revenue from sources like minerals, oil, and exports fluctuate, the sovereign wealth fund can help smooth out the budget, helping Kenya avoid excessive borrowing in bad years. So one is stabilization. The second thing that this sovereign wealth fund will help is in long-term saving and intergenerational equity. Rather than spending on resources and asset sale income immediately, the future generation component means Kenyan can save for now for future generation. This avoids boom and bust cycle. So it will help in saving for future generation by ensuring that they don't utilize all the resources right now, but save some for the future generation. And the third benefit of this sovereign wealth fund is the financial sector development and crowd-in investment. The sovereign wealth fund can act as an anchor investor, signaling to other investors that Kenya is open for business, which may boost foreign investment, development of local asset management skills, and the wider financial service sector. So this sovereign wealth fund will help in attracting more investors to come to Kenya by acting as an anchor investor. And one of the major benefits of this sovereign wealth fund is to reduce reliance on debt. By mobilizing domestic asset revenue instead of borrowing, Kenya may reduce its dependence on external debt. This helps improve fiscal sustainability, and that is the main agenda of the sovereign wealth fund. But for this sovereign wealth to help Kenyans, these are some of the three things that we should watch out for. The size of the sovereign wealth fund will depend on how much resources, privatization, or asset sale revenue comes in. So we may not realize this benefit if we have less resources coming into this fund. So for us to benefit from this sovereign wealth fund, then we need to have enough money coming into this fund. And also, governance, transparency, and sound investment strategy are critical. A poorly managed fund will under-deliver or may even become a liability. So without good governance, then we're going to see no benefit from this sovereign wealth fund. And finally, returns on the fund investment matters. If the fund invests poorly, the benefit to Kenyans will be limited. So one thing is how much money will get into this fund, the governance, and also how they invest the money, the returns on the investment. If we don't have good returns, then it will be a liability. And let's now go and see what infrastructure fund is all about. And President Ruto has already talked about this lately. And this infrastructure fund is a special fund dedicated to financing major infrastructure projects, e.g. energy generation, road and rail network, dams, irrigation, and industrial parks. The idea is to blend public funds, asset sale proceeds, and private sector capital to create a large pool of long-term capital for infrastructure. So that is the main agenda of the infrastructure fund. And how will this infrastructure fund help Kenyans? It will help by boosting productive capacity. By investing in infrastructure, that is road, power, and irrigation, the country can increase its ability to produce goods and services. E.g., more power means factories can run, better transport means goods can move faster. For example, Kenya Power's generation is currently 2,300 megawatts, and the goal is to reach much more to support industrialization. Industrialization cannot happen without power. So the second benefit of this infrastructure fund is agriculture and food security improvement. The fund can support dam and irrigation, which will help move Kenya away from heavy food exports. And that is what President Ruto has been talking about, to reduce imports of food. And one of the main agenda of this infrastructure fund is to build 50 mega dams plus putting over 2 million acres under irrigation in order to ensure that we have food security in our country. Another benefit of this infrastructure fund is leveraging private investment. Rather than relying wholly on government budgets, the fund can attract private investment, spreading risk and increasing the scale of the project. So you can see that these special funds are different from funds that were formed earlier because their main agenda is towards investment and also attracting private investment. And our fourth benefit of this fund is reducing long-term cost and improving efficiency. Better infrastructure lowers cost of doing businesses, for example, cheap electricity and better logistics, which can boost economic growth, employment, and export. So those are some of the benefits of this infrastructure fund. And for this to really come true, then here are some of the four things that you should watch for. Infrastructure projects are capital intensive and take time. The fund should pick projects with strong economic return and proper cost benefit. So if this infrastructure fund doesn't select the best project, then it will take long for us to realize the returns from it. So the main agenda here is to pick projects with strong economic returns and proper cost benefit. Another one is local financial markets and pension funds participation are limited now, e.g. restriction on infrastructure development. So for this infrastructure fund to really do well, then the government need to do some reforms in the pension fund to encourage them to participate in infrastructure investment. Another thing we should watch for is project selection and oversight, which are very important. Poor project choices, cost overruns or delay will reduce the intent benefit. So if the people running this infrastructure fund don't choose the best project, then we may not realize the benefit of this infrastructure fund. So that is one of the other things the government should watch for. And the fund must also complement other reforms such as governance, regulation, capacity to achieve full impact. And finally, let's now see the combined impact and why the formation of this fund really matters. So together, this fund gives Kenya two-pronged strategy. One fund, that is sovereign wealth fund, focuses on saving and stabilization, while the other, that is the infrastructure fund, focuses on building capacity and growth. So you can see there is two difference between the sovereign wealth fund and also the infrastructure fund. This strategy addresses major constraints, that is high debt servicing, limited fiscal space, infrastructure deficits, and the need for sustainable growth. So these two fund main goal is to focus on these constraints such as high debt servicing, limited fiscal space, infrastructure deficit, and the need for sustainable growth. And if these two funds are successful, then we'll have more jobs, better services, lower cost of power, improved roads, and more stable economy, potentially better credit rating. So in the future, the cost of borrowing will be lower because we'll have a higher credit rating. But for us to realize the benefits from this fund, that is the sovereign wealth fund that focuses on saving and stability, and infrastructure fund that focuses on building capacity and growth, there must be transparency and management and good selection of projects. Otherwise, we may not realize these benefits. So that is all you need to know about the special fund that the government has formed that will focus on being an alternative to debt borrowing and also to ensure that we have a steady economic growth while also servicing our debt and also to improve our credit rating as a way of lowering the future cost of borrowing. And if you have been able to gain some insights from this, I'll appreciate if you like this video and subscribe to this channel. And let me see you in the next video.